Money is a tool. Financial literacy is a skill you can learn. My name is Dave Gallegos. I've spent the last 25 years in the mortgage industry with a front row seat to American financial habits. And what I have to offer is so much more than about mortgages. So join me for a journey into financial literacy, brought to you by me and Zenith Home Loans. I'm your host, Dave Gallegos. Hi, everybody. Welcome back. I'm Dave Gallegos, and this is More Than Mortgage. This is a podcast designed to help the American consumer and really any consumer, and if you're listening in other parts of the world, I hope, to better navigate your finances. My goal is to help people achieve some level of financial peace in their life and hopefully an ideal level of financial peace. So I think there's 5 fundamentals for financial balance in your life. It's your credit, your spending, your debt, your savings, and your investing. And so homeownership plays a big part of that. I own a mortgage company, so that's no secret. So I definitely am pro homeownership, and for a lot of reasons. But let's talk about this. This is episode number 16, getting pretty excited. We're closing in on episode 20, which is just like a small, very small percentage of people that start podcasts get to episode 20. Like a huge percentage of them don't record their 4th podcast. So I'm going to keep going. And I love this subject, and I hope it helps. I hope you find it helpful. My goal is to just share the wisdom I've gained over 24 years in the mortgage business of helping, or 27 years, sorry, I lose count. And really nothing has changed in those 27 years. Going back to when I first started, I've said this a million times, most of the people who you think are doing better than you aren't. And most of the people who you think have more income than you do don't. People don't make as much money as you think they do. They all make less than you think they do. They all have more debt than you think they do. And if you're trying to keep up with the Joneses, you're probably doing just fine, and you should quit. You should only focus on you and pay attention to that. So the subject matter of the last 2 podcasts was centered around an article that I had read that I shared about did boomers really have it easier when it came to buying a home? I talked about how that the article, and I would agree with them, the article didn't have it easier. Boomers didn't have it easier than anybody else has had when it comes to buying a home. And shouldn't it be a sacrifice to buy a home was the subject of the last episode. And the answer is yes, it should be sacrifice to buy a home. It shouldn't be something that is easy to do. And if it was easy to do, they probably wouldn't be going up in value because there'd be no value. So let's just clear the air. I don't think there's any point in talking about whether or not it was easier to buy a home in the past or not, as it relates to what it is you're trying to accomplish. I know I spent 2 podcast episodes discussing that subject, but none of us own a time machine. So none of us have the ability to go back in time and buy a home when it was easier or cheaper or better. But I will tell you this, that there's an old adage that says the best time to plant a tree was 20 years ago, because 20 years later, you'd have the advantage of a 20-year-old tree. The next best time to plant a tree is today. And I think the same thing goes for home ownership. The best time to buy a house would have been 20 years ago. The next best time to buy a house is today. And I talked about last week, the fact of the matter is home prices will never be lower than they are today in the future. 5 years from now, 10 years from now, home prices are just going to always continue to go up in value for some really logical reasons. We've discussed this many times before. It's just based on the fact that the population of this country is projected to continue to grow until the end of the century, at least. And that's where it is today. So that means, it's 2024 when I'm recording this, 76 years of projected home price appreciation. And I'm the only one that's projecting that. You don't ever hear anybody else say that. I don't have anything to back it up other than the 64 years I've been alive, home prices have always gone up. So I'm pretty sure that that's going to continue, and the population is going to grow. So where are people going to live? Like people need more, and we're currently facing a housing shortage right now, which is why home prices continue to rise. So you don't have a time machine. You can't go back in time. So what we should do is focus on what you can do to put yourself in a position to buy a home today, if that's your goal. And I do think everybody should have that as a goal, because there's a whole list of reasons. But I think one of the challenges that the current generation of home buyers face, they've grown up and live in a completely different economic world than the one I grew up in and the one that my parents grew up in. My parents got married in 1955. I got married in 1986. So, a long time after they did, it was almost 30 years later. Their parents, my grandparents, I don't know what year they bought their first home, but they got married in the 1920s. And so that gives you an idea of how much economic changes have occurred in that time. And today, what's really different, and probably the biggest challenge, is there's so many creative ways for you to spend your money. And I didn't have the options that you have, and my parents didn't have the options that I had, who also didn't make as much money. So I hope what I'm about to say gives you hope, because every generation can say the same thing for each generation before them, that it was easier for them. Every generation can. I don't think the solution lies in the past. So that's really an important thing, because if you're just spending your time wishing home prices would come down, they're not coming down. You can wish for interest rates to come down, and we all wish for low interest rates. The cool thing about buying a home is, and using a mortgage to buy it, is the interest rate can go down in the future. But when you buy your home, the price can't get better in the future for you. Like whatever you paid for the house today that's your basis, right? So you start whatever that price is, and that's what you have to work with. You don't ever get to renegotiate the price of the house. You don't get to renegotiate. You get to refinance into a lower rated interest rate mortgage payment in the future when the markets improve, and they always improve. But again, I strongly advocate that people should become a homeowner for a lot of reasons when they're ready. But the benefits of home ownership, they're not just financial. I think I've talked about this on this podcast before. It's not just the financial benefits of home ownership, even though statistically, the average net worth of a homeowner is 40 times greater than the average net worth of a renter in this country. That should be kind of the end of the discussion. But, there's a bunch of other benefits too, including home ownership builds stronger communities for us to live in and raise families. It builds a better family dynamic relationships when all the people that live in a neighborhood own their homes. They take better care of their homes, which makes for a better community, which makes for a better environment to raise a family. And the children are better educated. There's more community. There's many psychological and financial reasons to own a home. And so the question then becomes, because I've been writing about the subject of buying a home, how do you do it? How do you become a homeowner, right? So that's what I'm going to address. And over the next several episodes, I'm going to delve a little bit deeper into that subject, because you can become a homeowner. Everybody it doesn't matter where you are. Everybody's always at a place called the start, right? So if you're going on a journey, a journey of 1,000 miles begins with the first step. That's really true, right? How do you eat an elephant? One bite at a time. How do you climb a mountain? How do you climb a 14er in Colorado? How do you climb a 14er? You got to take the first step. When it comes to buying a home, it's the same thing. So don't be intimidated. Don't be overwhelmed by the process. Millions of people have bought homes in the future, and they were all just as nervous and anxious about it as you might be. So don't worry about it. Everybody's been where you've been. So that's the first thing. The question is, how do you become a homeowner? And I think it definitely starts with understanding, what does it take to qualify for a mortgage to purchase a home? Because it's pretty doubtful that you have enough cash to buy a home. This More Than Mortgage is not probably a podcast that people with enough cash to buy a home are listening to. So if you're listening to this, you probably don't have enough money to pay cash for a home. And even if you did, you'd still get a lot of benefits out of this, because you'd learn all kinds of great things about, financial balance in your life and what I call the 5 fundamentals of financial balance. So here's the good news, is that you live in America, and America has probably the friendliest home buying environment on the planet, right? So when it comes to, and what I mean by that is, the amount of money that you need to buy a home is minimal compared to many countries. Like a lot of European countries, you need a 50% down payment, 50% of the house for a down payment. So you can buy a home with very little money with having to save very little of, a small percentage of the purchase price. Secondly, you don't need to have perfect credit. You do need to have good credit, and we'll talk about that. We'll get into that much later as well. But that's not how it is in most places. And so even if you find yourself without a lot of money, and we're going to talk about how to creatively come up with ways to save for your down payment. We'll talk about that. But even if you don't have a lot of money, you probably don't need as much money as you think. A lot of people have labored for years under the assumption that you need a 20% down payment to buy a house. False. You don't need a 20% down payment to buy a house. Now, there's nothing wrong with saving for 20% for a down payment or putting 20% down if you have no other use of your capital. But in almost every situation when I've talked to somebody who's planning on putting 20% down to buy a home, and we talk to home buyers every day here at Zenith, that when they plan to put down that 20%, we talk to them a little bit longer about how they're going to plan, what their financial plan is for the money and how they're planning on using it. Almost all of them opt into doing something different than putting down 20%, like putting down less and doing something different with the rest of that capital, because there's a lot of things that you should look at. But that said, there's no down payment loan programs or down payment grant programs. If you're a veteran, you qualify for no down payment financing. 3% down payment programs are available, widely available. FHA is 3.5% down if you have a little bit spottier credit. Even if you don't have spotty credit, FHA loan can be a really good option with how expensive the Fannie Mae and Freddie Mac loans have become for putting down 3% with all their annoying and unnecessary loan level price adjustments. They're just my 2 cents. But so you live in a country where it's not overly challenging to buy a house, and that's really good news. So here's the deal. If you don't need a lot of money for a down payment and you don't need to have perfect credit, what do you need? Like, how does this work? And so that's what we're going to talk about. That's what we're going to talk about today. I'm going to do a little educating of explaining how this works for people. So mortgage lenders look at 3 things regarding your ability to get a mortgage and buy a home. All right. And there's 3 things. Number 1, they look at, will you pay the mortgage payments back and will you pay them on time? That's the first thing they look at. Number 2, they want to look at, see whether or not you can actually afford those payments, right? That's the second thing. And then number 3, do you have the financial ability to close on the actual transaction itself? In other words, do you have enough liquid assets? By that, I mean, do you have money in the bank to close the transaction based on the mortgage you're doing? So if, for instance, you're putting 3% down on a $500,000 home, it's simple. Do you have $15,000 in the bank to use as a down payment on your home? It's that simple. We have to verify that that money exists. That's it. So do you have the wherewithal? There's more money than just the down payment. I'm not going to get into all of that. I'm just trying to use simple math so that you get it. But if you're putting 3% down on a $500,000 house, the question is, do you have $15,000 and can we prove it? Because, and why is that important that we can prove it? Well, we want to prove that you didn't borrow it, right? That you didn't borrow it from somebody and now you have another monthly payment that we're not counting. So that's it. To summarize, it's as simple as, number 1, will you pay? Number 2, can you pay? And number 3, can you close on the transaction? Look, folks, with the proper guidance and a little determination on your part, it's a really straightforward process that you can navigate really pretty easily. People do it every day. It's just overwhelming because you've never done it before. And then honestly, I get it, because when I would talk to most of the clients that I was doing business with when I started in this business, I used to ask them this question. I would say, hey, so just out of curiosity, does everybody you talk to about buying a home make it sound like it's really easy and no big deal and, oh, it's fine, but for you, it's kind of scary and a little stressful? And every customer would always want, like, yeah, exactly. That's exactly what it is. Well, guess what? That's exactly how I felt when I went to buy my first house. My wife and I were like totally intimidated by the process. We were totally stressed out about what we were doing because we didn't know. And we weren't getting any education as to how the process worked. I can remember wondering, like, are they going to ask me more questions? What else am I like? I kept thinking somebody was going to tell me everything that happens. So part of the process that we advocate and that we provide for all of our clients is a complete understanding of exactly what's going to happen and when, how much money you're going to need, when you're going to need it, and exactly what to expect from the time you start the process all the way through closing. We're going to walk you through the process every step of the way. I always used to ask my customers, when I'm done explaining this to you, you're going to say, thank you. No one's ever explained that to me before. And every customer would say, that would be awesome. Thank you very much. Because it's just, so I'm going to do that. I'm going to one of the, not this episode, but in another episode, I'm going to explain the process to you so that you really get it, so that you really understand, because I know this is called More Than Mortgages, but it's not just go get a mortgage. It's about how does this process work and what do you do and how do you do this in a way that gives you the financial peace and the financial balance that you're looking for in your life. Because the last thing you want to do, look, I don't want you to become a homeowner and not be successful at it. Our approach is that we want you to be the most successful homeowner that you can possibly be. If all I'm doing is slinging debt, then I've done you a disservice, quite frankly. And the mortgage companies that treat these like transactions are not very helpful, and there's so much more that they could do. And you don't have to be stressed out about the process, and you can have a bigger overall financial approach to this beyond just, do I get the house? Which is what far too many people do. So let's go back to what I said. Number one, will you pay? Number two, can you pay? And number three, can you close on the transaction? Let's talk about number one, will you pay? I'm sure that you've already guessed, but that's this question. The question that needs to be answered is, are you a reasonably good credit risk? In other words, if the bank loans you the money, will you pay it back? That's reasonable, right? Like, of course, the bank's going to loan you. And think about this. You're going to buy in my $500,000 example, you're going to buy a $500,000 house. We're going to give you the keys to the house, a $500,000 house, and we're going to only ask that you put up $15,000, and then we'll loan you $485,000 for this $500,000 house. The bank is actually going to service your loans, never going to meet you personally, right? So it's all done through us, and we have to make sure that you're qualified properly for that mortgage. And that, again, I don't want to overqualify you. The last thing I want to do is put you in a mortgage. Nobody here wants to put you in a mortgage and then have to foreclose or lose the house or because you can't afford it. So nobody's going to do that. But our goal is to make sure that, like I said, we want you to become that successful homeowner. So they're going to loan you $485,000 and you only have to put up $15,000. Now you're controlling this $500,000 asset. And here's the beauty of it. If that asset, that 500, I'm veering off a little bit here, but if that $500,000 asset goes up 5% in 12 months, your return on investment on your $15,000 investment is $25,000. You invested $15,000 in the house and you've got $25,000 worth of appreciation. That's what makes home ownership such a powerful tool, because for a very small amount of capital, you can control a very large asset and get the appreciation on 100% of the asset. And yes, you have to pay interest on the mortgage and all of that stuff, but that asset is appreciating. And, a year from now, it's going to be, if it's $525,000 this year, a year from now, it's going to be worth about $560,000, right? So another 5%. So if that's how it works and you only put up $15,000 of your money, you think about how powerful that is. And meanwhile, you had a place to live. You were still going to have to make a payment to rent something. And I'm getting off track here, but that's the point. So what we're talking about is the bank's going to loan you money and they want to make sure you're going to pay it back. So what do? How do they figure that out? Well, it's pretty simple. They look at your credit, right? So we have to check your credit. That's the first thing. And we're going to look at your credit history. If you have a history of paying all your bills on time and you do it consistently, you have an excellent credit score. Now, some folks, unfortunately, their credit history isn't always what it should be. But we have talked about this, and this is easily remedied. On future episodes, I'm going to hit the highlights today, but we're going to talk about these in a lot more depth in future episodes. But there are honestly there are three simple steps to address when it comes to having excellent credit. And believe me when I say, if you're somebody who has struggled with this, and I'm raising my hand because, full disclosure, there's two times in my life where I've had very bad credit, like embarrassingly bad. Like, I don't want anyone to know how bad my credit score is bad. Just two different difficult financial times in my life. I got behind on my bills and I got behind even further, and it's pretty bad. And I will tell you that I've been where it's embarrassing and humiliating to have bad credit, and you don't want to talk about it. You don't want anyone to know. And what you got to do is you got to find somebody who you can talk to, who you can trust. All of the loan officers that work at Zenith Home Loans are more than capable of giving you some guidance. We can't fix your credit, and we don't fix credit here. But what we can do is, is give you some ideas and some pointers. And I'm going to have a guest join in a few episodes to talk about what can you do on your own to have the best credit that you can. But let me talk about what I think are the 3 main steps to making sure that you have excellent credit in the future, because anyone can have the perfect credit score all the time. You could have a high 700s, low 800 credit score your whole life with just a few steps. And it's really simple. Number 1, no more late payments. Stop. Hard stop. Like, that's the first and most important thing that you can do. You cannot pay late. If a bill is due on a specific date, you got to make sure the bill is paid on that date. You got to learn what the rules are and when you're reported late, and all of those things matter. For instance, on a mortgage, your mortgage is due on the 1st. It's late on the 15th of the month, and there's a late fee if you pay past the 15th of the month, and then it's reported late if you're more than 30 days late. So even if you paid your mortgage 20 days late, you're not going to have a mortgage late. You're going to have a penalty. You're going to have a financial penalty for that. But so it's important to know what the rules are. You cannot pay your bills late. So whenever we talk to a customer, if we pull your credit and you've had a late payment on a consumer debt in the last 12 months, there's a significant hit to your credit score for that. So the last 12 months are the most important thing. And then the last 24 months are the next most important thing. And if you've gone 24 months with no late payments, you've got a very high credit score, assuming there's a few other things. But that's the most important thing. So what's the most important thing that you can do to make sure that you never have late payments? Auto pay, right? So if you have a credit card, first of all, we're going to talk about getting rid of your debt. But if you have a credit card and there's a minimum monthly payment due, all you have to do is log on to that website of that credit card company and set it up to where they're automatically deducting a minimum monthly payment. This isn't all that you're going to pay, but they're going to automatically deduct the minimum monthly payment on the due date every month, and it happens automatically so that you don't have to remember to do that. This is like the simplest step, and you'll take it out of your hands so that it's not something that you have to remember. Most of us are terrible at that. Until I did that, it was really hard to try to keep track. And then I just realized, like, why don't I just set it up for the minimum payment? And that way I can always cover the minimum payment. So that's the first thing. No more late payments. Number 2, you got to deal with any negative items that are being reported on your credit. How do you deal with your recent lates? If you have a late in your recent past, I'm talking about in the last 30, 60 to 90 days, there's a chance that you can talk to the creditor and get them to correct it, or not correct it, but remove it, or even negotiate with them to, like, if I pay the next 6 payments on times, will you drop it? Like, there's things you can do with your recent lates. Brand new lates, okay, you get a late. If something happens like right now, late payment like just happened, absolutely pick up the phone and call the creditor. And then old lates and collections and judgments and liens. Like, old lates and collections are different than judgments and liens. If you have old late payments on your credit report and you have old collections on your credit report, you're going to deal with the collections. The old late's probably too late to do anything about it, depending on their age. If too much time has passed, the company that you're dealing with probably isn't that interested in making a change. If you have collections, you have to deal with those collections somehow. So, and again, we'll get into that. I'm not going to get into it today. And then if you have judgments and liens, you absolutely have to address the judgments and liens, because those are part of the public record and they're not going anywhere. If you have judgments and liens on your credit report, you probably have a suboptimal credit score that would prevent you from getting a halfway decent mortgage rate. And here's the other reason that you want to have an excellent credit score. Everything in your life is cheaper. Everything in your life is cheaper with an excellent credit score. So just have an excellent credit score. The third step is to pay down and or pay off as much of your debt as possible, but don't close any revolving accounts. So those are the 3 steps. Those are high level. We're going to get into those a little bit further on future episodes. But I wanted to talk about that. The one thing that I want to leave you with, because we're going to look at your credit scores matter, and your history of paying bills on time really matter. And that's what the credit scores reflect. The 2 big takeaways for today are, number 1, set up the auto pays. That's the biggest thing. And number 2, go to optoutprescreen.com. So write that down. optoutprescreen.com. And it's where you can opt out of receiving any unsolicited offers of credit from creditors. This is a kind of the dirty little secret of credit scoring, is that as soon as your credit scores can actually improve as soon as you do that. And what can happen is that other creditors are not authorized to check your credit, which can impact your score. So the other huge benefit to doing opt-out pre-screen, and when you go onto the website, I believe you can opt out for 1 year, 5 years, or for life. I don't know, whatever it is, opt out for as long as possible, is that you'll no longer receive any unauthorized, or unsolicited offers of credit. Like, when you get a credit card offer in the mail. This can help with identity theft because a crook can drive by your house, grab the credit card statement or grab the free offer of credit, fill it out, get you signed up, and just keep checking your mailbox every day until the credit card shows up. So if you've got great credit, it's easy for you to get scammed that way. So it's important for that. But the other thing is that when you do decide to get a mortgage, or you do decide to buy a car or something in the future, and someone, like what happens with mortgage is that if a mortgage company checks your credit, there's the credit bureaus are selling your information. This should be illegal. There's some bills in Congress to address this issue, and it should be illegal, but it's currently not. That the credit agencies have the right to sell your information to people that are willing to pay for it. So there's entire mortgage companies all over the country, hundreds of thousands, well, not thousands, but hundreds of mortgage companies around the country with thousands of loan officers, and they're paying for that's called a trigger lead, and they're paying for that lead. And your phone, if you do a mortgage inquiry, your phone's just going to blow up, and you're going to be getting tons of people calling you, emailing you, texting you, wanting to see. You're going to wish that you never did that. So optoutprescreen.com is the website to go and do that. So that's it for this week's episode. This has been fun to talk about this subject. It's important for you. I'm not saying that everybody should own a home. I'm saying that everybody should have financial balance in their life. And I believe that homeownership is a great tool to use to achieve that if it's done well, and if it's done with the right planning and the right determination and having the right guidance. We'd be happy to. We can reach out to a loan officer at Zenith Home Loans anytime you want. And that's not what this podcast is supposed to be, but I own a mortgage company, so it'd be dumb for me not to tell you that. If you have an interest in buying a home and you don't know where to begin, reach out and we'd be happy to help you. That's it for today, everybody. This has been episode number 16. Episode number 17 is coming up. Please give me a rating and share this with your friends. I would really appreciate it. It would mean a lot. Here's my quote of the week. By failing to prepare, you are preparing to fail. That was from Benjamin Franklin. If you fail to prepare to buy a home, then you're preparing to fail to buy a home. So just remember that. The benefits of owning a home and creating that kind of financial peace in your life is really immeasurable. It's been one of the best things that ever happened to me. And it's one of the reasons why America has one of the highest homeownership rates in the world. So there you go, everybody. Thanks a lot for listening. Have a great rest of your day.
Thank you for listening to More Than Mortgage with Dave Gallegos, brought to you by Zenith Home Loans. If you enjoyed this episode, please subscribe anywhere you find podcasts and share this episode with a colleague who would also find value.